All right, better late than never, right? Thank you for tuning in to another edition of the PulseWave Report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger Reports. All right, so real quick, a heads up. Tomorrow we're going to be doing our webinar. You go to PulseWaveTrading.com, you can register for tomorrow's webinar. It's going to be our big Q&A, our first Q&A for 2021. Bring all your questions and we'll be ready to answer them. All right, so make sure you have some questions ready. Anything you want to talk about regarding these markets, regarding the system, how we use the pulse waves and all that good stuff, we will be there and ready for you tomorrow. Like I said, go to PulseWaveTrading.com. You can register for tomorrow's webinar. And it's probably going to behoove you to do that ASAP because those things tend to fill up rather quickly. All right, so just be forewarned, tomorrow we're having that webinar, our first Q&A of the year, and the Q&As usually fill up pretty fast. So first come, first serve. We can only hold X amount of people at once. So you're going to want to come on and make sure you have a spot in there. I do not know if it will be recorded or not. So you should plan to be there. If you can make it, like I say, go to the website. All the information details will be there so that you can plan your day. All right. So with that being said, we are now another day, another dollar, right? So here we are this morning. We find ourselves in another insane moment in history as the so-called Reddit users, Reddit traders are being brought out before the world as the great villain because they dare push back against the powers that be. You have dared to play in their world. You dared to come in here and take food off of their table. How dare you? All right? That's something they don't usually tolerate. Okay? They don't want us participating in their world. So when you do that, like I told you before, what they want to do is to come in and remove every exit for you, every safe zone they want to take away. Anything that's going to allow the little guy to come in and participate and play the game the way that they're playing it. All right. Like I said, playing the game the way that they're playing it. Not doing anything different, nothing out of the ordinary, just getting your piece of the pie. Well, that's just not allowed. Who told you that you could play in the sandbox of the elite? And they keep throwing the words around, the same talking points. The word safety. Everything is about safety now. And I'm sorry, everything cannot be about and is not about safety. There is no way for you to keep anyone safe. Safety is an illusion. It does not exist. Okay? Whether you take action or you're stuck with inaction, it's still an action. Doing nothing just as well as doing something is still a decision, it's still a choice, and it's still an action. They cannot protect you from actions, reactions, and no actions. Just like they can't protect themselves from the same thing. If a person decides they're not going to invest or save money for their future, that is a choice, that is a decision, that is an action. Consequences, ramifications, and repercussions and reactions will still occur. You can say, I am neutral. I do not take sides. I will not choose a side when it comes to just about anything. And even that is still a decision, and it's still an action, and it still comes with consequences, ramifications, repercussions, and reactions. You cannot avoid that. All right? It is the universe that we are born into. What we are seeing when it comes to the attack on the retail guy is history repeating itself. A lot of people that are listening under the sound of my voice are too young to remember, or maybe you weren't alive yet, but this has happened, and it happens time and time again. They don't blame the central banks. They don't blame the Fed. They don't blame the Department of Treasury. They don't blame the SEC. They don't blame the exchanges. They don't blame the big sovereign wealth funds, private equity funds, hedge funds, mutual funds, any of the big Wall Street names and players. Nope, it's the little guy's fault. It's the mom and pop. It's the guy in his basement, the guy sitting in his living room on the couch. You're the culprit. You're the bad guy. You're the bad guy. If stocks fall, it's those darn speculators. If stocks rise too fast, too high, too fast, it's those darn speculators. If the small guy is finally getting the one up on the big guy and causing the big guy to lose money to the small guy, oh, we have to do something about it. We need to enact new laws and legislation. They want to make it harder for you to ever beat them at their own game again. Oh, no, we're not trying to take away people's right to be able to trade. Oh, no, we just want to make it safer for you. No, not safer for you, safer for them. So they're throwing around a lot of ideas, such as making it mandatory that if you buy a stock, you must hold it overnight. Trying to make that mandatory. Now, keep in mind, whatever rules and new legislations that they decide to bring, trust and believe they are going to exempt themselves. Whatever rules they place, they will be exempt from it. Always remember that. Even Congress exempts itself from all the laws that they enact, all the new legislation that they push. They always make loopholes and ways of escape for them. All right? The rules don't apply to them. They only apply to everyone else. So trust and believe if they bring new rules, it's not to help you. It's not to keep you safe. It's to help them and keep them safe from you. Remember, everybody, the government fears the people. Okay? The agencies fear the people. That's who they're afraid of. Everything that they do, every new rule or law that they enact, it's not to help you. It's to protect them from you. Don't ever get that twisted. Don't ever think that they're doing anything for your benefit or for your good. That is not true. Just moments ago, there was a discussion on CNBC. The bald-head black guy, I don't know his name, but they had a guest on. It was asking him because he was saying, he was pointing out what I'm pointing out to you, that this is the slippery slope that we're on, and this is what's coming. And it is, stomping out free speech, and it is, making it so that the people can't trade. He was like, well, name me one person who said all the things you just said. He set up a straw man argument. He didn't deal with the substance of what the gentleman said. He attacked him and threw a red herring and set up a straw man argument. Name me one person who's saying all the things that you're saying. What did that have to do with the statement that the gentleman made? The statement that the gentleman made is that they're talking about reenacting new rules and bringing up new laws that is only going to end up penalizing the small guy, not the big guy. And he ran down the list like I do for you. He ran down the list. So instead of dealing with it, he just asked them, name me one person that said all the things you just said. Okay, you can't do it. I rest my case, and that was it. There was no debate. That's not a debate, and that's not what he was saying. That's not what he was saying. See, let's go back to the beginning. Once upon a time in the 1990s, there was no pattern day trade rule. Nope. You could open up an account at any brokerage firm with $500 and go ahead and start buying stocks. There was no limit. You could do that 100 times a day, going in and out of stocks, in and out of shares. Something that the elite do all day, every day. But see, they got greedy. So they developed high frequency trading robots so that they can do what you do at your desk 1,000,000 times a day. Instead of just a few times you can do it a day. They want to do it 1,000,000 times a day. Now, see, here's the thing. The rules don't apply to them. Front running and all that doesn't apply to them. They get a free pass. They can front run. As a matter of fact, places like Robinhood and other brokerages as well sell their data, their user data, to these large Wall Street banks, large Wall Street firms, so that they can front run your orders and run your stops. These are facts. But when things go left for them, when they make a mistake, oh, it's your fault, and or the taxpayer has to bail them out. Wall Street has a long history of the taxpayer having to bail Wall Street out. But Wall Street has an ugly history of always disrespecting the little guy and blowing up people's accounts. That's Wall Street's history. Getting rich off of you. While you face financial ruin, they're getting richer. That's Wall Street for you. But now, because of the internet and online trading, now they're manipulating of loopholes and taking advantage of market anomalies. That's starting to break down for them. So they don't want to be another hedge fund that's forced to close up shop. So they are going home to mommy and daddy and complaining and saying, see, look what's happening. We need your help. Mommy, daddy, can you please help us? Help us from the little guy. The little guys are organizing, and that's not fair. But Wall Street's been organizing for decades. What are you talking about? They organize at the country club. They organize on the golf course. They organize at charity events. They organize at this dinner, this fundraiser, that fundraiser. They organize all the time. What are you talking about? Again, the rules don't apply to them. It applies to you. You're not hearing any talk of the 120, 130, 140, 50% shorts in a single stock. Instead, what you're hearing is them spinning how that's normal and it's okay. So the mainstream media has already taken the side of Wall Street, the big banks, the big firms that have been shorting and got caught shorting, and now they've blown up. All right. And here's the thing, it's not all the hedge funds. It's just one or two hedge funds that got their hand caught in the cookie jar, and now they're crying home to mommy and daddy. There are a lot of big Wall Street firms that were right there with the Reddit users driving up the prices higher. You got to understand something, ladies and gentlemen. You got to look at things in the right perspective. If 50 million shares of a $400 stock took place, don't stop for 1 second to think that that was small retail specs. You can't name me 10 people that you know that can buy a 100-share lot, 200, 500,000, 2,000, 5,000 share lots of a $400 stock. Those are big firms. Those are hedge funds. Those are private equity funds that are pushing this market higher. The little people are just along for the ride. It's the big money that's done this. The big money created the GameStop situation. If they weren't allowed to be 150% short the stock in the first place, this would have never have happened. What this has done has exposed the wrongdoing and rule breaking of Wall Street. Why do you think the SEC didn't say anything? Because the SEC knows what time it is. The SEC knows what the rules are. They made them. Only thing they could do was sit back and laugh off the record because they know what's going on. They're like, no one's broken any laws. Now you got Nancy Pelosi and all these other, people getting involved and want to give their 2 cents. And they don't know nothing about the markets. They ain't never traded no market. What they know? How you gonna talk to Nancy Pelosi about a market? They can't even govern correctly. And you want to get their advice and have their talking heads on TV to tell you about markets? Please. They don't know nothing about no markets. They ain't done nothing in no markets. Well, what have they done in the market? Show me. You can't show me nothing because they ain't done nothing. They don't know nothing. They don't trade. They don't even understand economics. That's why we got this massive deficit. And that's why the jurisdictions where they govern at and represent is also out of order. They don't know nothing about no economics or finance. Don't listen to them. How you gonna get them involved? The people who lost all the money is the ones that's getting them involved. Understand that. No one else is asking for their 2 cents. Except for the people who lost the money, who got punched in the face. The people who got greedy. Those are the ones that are asking mommy and daddy to bail them out and to make it illegal for you to get in there and play their game. That's really jacked up. But that's what's going on. They have no right to come in here and tell you what to do. All right? Understand that. No matter what they do and say, it is not going to be for your good or for your benefit. That's what I'm trying to get y'all to see. It's not going to help you one bit. Their job is not to help you. They don't want to help you. They don't give a darn about you. They're not trying to help you. They want to help themselves get richer. That's what they do. You can't trust them. I told you guys to vote them out, but nobody listened to me, so now it's too late. I told you to vote them out. I told you to get them on up out of here, but people didn't do that. So now you're stuck with them. You're stuck with who you elected. I can't help you. But just understand that this is not over. And there will be new rules and laws and legislation to come on the back of this. There's always unintended consequences. I thought the market was great, that it was perfect, just the way it was pre 9/11. They didn't have to fool with it. They didn't have to touch it. That was a choice that they made. They made that choice to do that. They didn't have to do that. There was nothing wrong with the market. All they had to do was let the market be the market, and it would have been good. But nope, even that is too much to ask. Can't have it. Can't have that. They got to meddle. This is that intervention attitude that exists in the US of A. They always want to intervene and mess something up. Because that's what happens when they intervene. They mess things up. They don't fix anything. If it ain't broke, don't fix it. So I'm just saying, this is where we are, ladies and gentlemen. Don't let them deceive you. It's not a good thing for them to do anything about this. Leave the market alone. Let the market be free. Who are you to tell someone that they didn't do fundamentals or that there's no fundamental reason for GameStop's stock to go up? Who are you? The only people who are saying that are the ones who were so short and they lost all their money and got caught short. Those are the ones that are saying all of this. You can't tell another man what he's doing in the market. You don't know what people's goals and reasons and rationalities are. If I want to buy a share of GameStop and you want to sell a share of GameStop, I don't need to know your reasons for selling, and you don't need to know my reason for buying. Just let us do our business and keep it moving. They need to stop. This is not good, man. It's not good enough for them that they rigged an election, stole an election, but now they want to take away not only your free speech and shut down Reddit so you can't get on there, but they also want to shut you out of the market under the guise of protecting you. So they're going to raise margins. They're going to say you got to hold the stock overnight, no more day trading, which would blow up the pattern day trade rule. Because if they do that, then there's no need to have a pattern day trade rule. You have to get rid of it because no one will be allowed. So now you're banning the forum on Reddit and you're banning the forum on Discord. These forums have existed before there was even online trading, ladies and gentlemen. The forums existed before online trading. The advent of online trading did not come into being until the early 2000s. Between 2000 and 2003 was the birth of online trading. Prior to that, there were trading message boards. There are so many, I can't even name you all the famous message boards from back in the day because there were a lot of them. The Yahoo boards were buzzing. You had websites like Elite Trader where people would go on there and go back and forth and post and okay, I'm getting long here and putting my stop there. Where do you think all this came from? That was the birth of it back then. And in order to be a member, all you had to do is just come on there, and in order for you to post, you had to post what your entry price and where you were placing your stop. If you didn't do that, you couldn't be part of the forum. You couldn't post on the forum. Those were the rules. You got to place your entry point and where you're placing your stop. If you just got on there and say I bought shares of Yahoo at $23, you're banned. You didn't place your stop. That's your first warning. Do it again, you're banned. That's how they used to flow back then. Okay. That's how we did it. It was the Wild Wild West. You had thousands and thousands of people in the room, all posting at the same time. It was madness. All right. And then we have like little competitions and stuff. So who could get the most S&P points in the day and stuff like that. It was a lot of fun, man. But they also had forums, trading clubs, trading groups. Trading clubs are a recognized group. You know that, right? Investment clubs, those are recognized clubs. Those are real clubs. And some of them are older than the people listening to this broadcast right now. They go back decades, investment clubs. So what are you going to do? Say investment clubs can't talk to each other on Facebook or whatever social media platform they want to use or whatever website they want to be on. So now they can't talk. Do you know how many investment clubs there are just in the United States alone? My goodness. And some of them are old as dirt. They go back to your grandparents, man. Investment clubs. Are you kidding? So you're going to shut them down? That's all Reddit was. Reddit was basically a investment club. Everybody's on there talking about, sharing research. Let's talk about the research. Oh, there's no fundamental reason. Well, first of all, that's where you're wrong. A lot of these so-called mom and pop people, regular, average Joe Plumber people in these investment groups, they are way smarter than the majority of the Wall Street analysts. I will put my money on them any day. I met some very bright individuals, and they would post their research on a particular stock, and it was absolutely phenomenal research. Phenomenal research. They would break things down every which way. They could tell you where the CEO went to school and what he ate for breakfast that morning. Straight up. Their research was incredible. Some of these groups would even get on a plane and fly out to headquarters to get a feel for what's going on. Whether they could meet the CEO or not, they will fly out still. They want to look at the headquarters. They want to gather what's going on. Oh yeah. Now, under the banner of corporate espionage, because this is what they do, but investment groups do it too, but not for espionage. What they would do, some people would literally go and interview customers coming out of a retail store and do research that way. Talk to the man on the street. No, I'm not getting a good enough feel. We need someone in the group to go and get a job at Target real quick, because we need you to gather some intelligence. We want to see how they really doing, how they really move. Are they really moving the merchandise like they say? How are they doing what they're doing? What is the environment look like for the employees? Are they happy? Are they sad? Is it a revolving door? Do they have too much turnover? What's really good? Okay, so Robert, you go get a job at Target. Okay, Sam, you go work part-time at Walmart. Okay, Susan, you go to McDonald's. We need you to report back. You go work there for a minute. Tell us what's really good. You think this is a joke? You think I'm making this up? This is reality, folks. This is not new. Corporations do it to each other all the time. You don't think so? You don't think when the first Tesla rolled off the assembly line that Ford and Chrysler and all of them didn't go out and buy one and bring it back to the factory so they can disassemble it and see what he did and see how he made it and what's really good? You don't think that happens? Huh? You don't think IBM went out and bought an Apple computer? You don't think Microsoft went out and bought an Apple or Mac and brought it back to the headquarters? You don't think so? Every time there's a piece of new technology, ladies and gentlemen, your ops will go out and purchase your information so they could reverse engineer and take a look at what you did, and whatever you don't have patent, that's what they're going to come out with. Now, before you say this guy doesn't know what he's talking about, he doesn't make any sense. Really? Okay, so for those of you who are parents and you have small children, before Toys R Us went out of business, can you recall going into the store? And let's say I'll use, for instance, something old school that everybody can relate to. Do you remember Cabbage Patch dolls? Do you remember My Buddy? Do you remember that? My buddy, my buddy, my buddy and me. Remember? Chucky's character was basically based off of My Buddy. All right? So, for parents who couldn't afford the Cabbage Patch doll or the My Buddy doll, there were spin-off knockoffs that looked pretty much like them, but you could tell it wasn't the same. So instead of My Buddy, this one, his name may be My Bully. Or instead of Cabbage Patch, this is Okra Patch. All right? There was always a spinoff. How did you ever ask yourself a question? How were they able to come out so fast with this? Even when Transformers was big, if you couldn't afford, your parents couldn't afford to buy you a Transformer, there was always another off name. They couldn't use Transformer because that's copyrighted. So they'll say, okay, these are shapeshifters, and you would see that in the store right next to your Transformers. Transformers may be $40, and the shapeshifter may only be $9.99. Why and how do you think there were knockoffs that would appear out of nowhere whenever you go look for the name brand thing? Same thing with sneakers. Man, I can't afford those new Adidas. Yeah, but you can afford these XJ9000s. We use the same pattern and color and everything as that new Adidas, but guess what? These are XJ9000s, and they're only 50 cents a pair versus the Adidas that they want $150. It's that way with technology. It's that way with clothing. You name it. There is knockoffs for everything. And where did you think they got that from? You reverse engineer so you can come up with something that's not protected. Where do you think the whole thing with generic drugs came from? Huh? That's where the generic drugs come from. Oh, so-and-so Pfizer's patent is gone. It's over with now. Okay, let's say so Pfizer has the ABC drug. Okay, so we can't use ABC because that part is copyrighted and trademark, but we can call ours since they're ABC, will be XYZ. Here's the XYZ for your arthritis. And it's only a fraction of the cost of the ABC by Pfizer. Ladies and gentlemen, this is old school. This is not the new under the sun. So why are you all over? Why are you all over the little investment group, the little Reddits? When Wall Street's been doing it forever. Take a big firm like Goldman Sachs that may have 12 million clients. They have in-house research, and they're giving all 12 million clients the same research. So if Goldman Sachs says GameStop is getting ready to go up, and they give that to all 12 million of their clients, you don't think at least a majority or 80% of them are going to go ahead and say, yeah, go ahead and buy me that stock? Get me long GameStop right now? So what's the difference if Goldman Sachs does that for all of their clients, right? What's the difference if the investment group is doing the same thing with their little group? I don't care which investment group you want to talk about. When we talk about Joe Plumber, Nancy Public, there's nowhere in the world they have enough money to move a market. I don't care how many people were on the Reddit board. They do not have enough money to take GameStop from $20 to almost $500. They just don't. They just don't. They don't have that kind of money. All right? It's the big players. Big players just cannibalize each other with this whole GameStop thing. Don't blame Reddit. Reddit didn't have nothing to do with that. Other big players pushed that and made that happen. Okay? Let's just keep it 100, man, and stop all this fakery. You know, before all this happened, I told you I had a bad feeling that at some point they were going to try to take the small guy out of the market altogether. Not making it illegal, just making it impossible for you to get in. Just like the average hedge fund. The majority of Americans can't even become a member of that and put money with it because you don't have $1 million or $10 million or $5 million to go in there. Yeah, I will never forget an article that I've read. I think it was in Forbes. Anyway, this is back in the 90s. And there was an article in there because what happened was one of the DuPont family members who inherited, like 10 million bucks, right? Trust fund, whatever. He was like, okay, I got 10 million bucks. First thing I want to do with this, I'm not going to go buy a car, a boat, or a house. Nope. I want to invest. I'm going to put my money in the market. Let me go over here. Let me contact some of these firms. Let me contact JP Morgan. Let me contact, Goldman Sachs and Merrill Lynch. Let me contact them. They're the big estate planners, the ones that deal with people like myself. Because, I'm Big Willie now. I got $10 million. So I'm big balling. I know they're about to roll out the red carpet for me. All right, here we go. Let's do it. He picks up the phone and says, okay, I'll call the first name on the list. What's the first one on the list? Any, mini, money, mo. JP Morgan. Okay. Yo, JP Morgan, what's up? Yeah. Look at here. I just inherited $10 million. My last name is DuPont. Okay. I'm Acme DuPont. And I would like for you to let me stop you right there, Mr. DuPont. How much money did you say you had that you were working with? Oh, I have $10 million. Okay, I'm sorry. We're busy and we're not taking any new clients right now. Sorry. And to be quiet, he's like, wait, hold on. I got $10 million. Are you about to hang the phone up on me? Oh, well, sir, can I speak frank with you, Mr. DuPont? Yes, you can. Okay. Yeah, go ahead. What's up? We don't take small accounts. And right now, your account is too small for us to work with right now. So have a nice day, and we wish you luck. Click up. Facts. He got turned down. Wall Street said no. Everywhere he called said no. Your account is too small. He had $10 million. And all 10 million of it was for investment. It was risk capital. If he lost it all, he still would have been good. They said, no, you don't have enough money. He was like, I got $10 million. What do you mean I don't have enough money? They said, "Oh, you don't know, do you? Okay, you're just a little teeny guy. We only accept clients with at least 100 million or more." Think I'm lying? Look it up. Yeah, 10 million wasn't enough, ladies and gentlemen. And this was the go-go 90s. 10 million wasn't enough. They told him to have a nice day, take a walk, hit the bricks, beat your feet, roll out. So if his $10 million was nothing, what do you think Reddit's little money? What do you think that is? He can't move no market. Back in the day before they, started manipulating and breaking the markets, if I traded 5,000 contracts on crude oil futures, you think I would have moved the market? No, that would have been a blip. You think if I traded even 1,000 contracts on the T-bills on the Treasuries futures, that would even been it wouldn't even made a splash. The market was so ginormous, it wouldn't have made a splash. I wouldn't even be able to move the market a tick. The market would have absorbed that like it wasn't nothing. So, ladies and gentlemen, you are seeing the United States of America go on a course that is quite frightening. So I think you guys need to do the knowledge to what's happening here. Peep the science behind all of this. All right, do the knowledge to this. All right, it's not looking good. Is our economy about to go belly up? Is the economy really that bad that did a couple of firms blow up on a trade and now they're crying to Congress and they're crying to their legislators and they're crying to the SEC to form an investigation of people clicking buy and sell? What's there to investigate? I'm telling you, something don't feel right. I think it's a setup. It don't feel right. It really don't. It really don't. And then you got Nancy Pelosi weighing in. Really? Nancy? Come on, man. All right, so let me help y'all out. I'm gonna help you out. This is what is on the wall right now, but we'll see what sticks. Okay, so if they say you have to hold a stock overnight, at least one day, that's not so bad. Because all of my post waivers out there who use the PulseWave reports, they know that when we place a trade, we are automatically anticipating that we're going to hold it overnight. We're not day traders over here. So we're cool with that. But don't tell me I can't take profit in the same day if I see a parabolic move in my favor. That is insane. The stock market should be left alone. It's not a 401k. All right, we're talking retail specs who provide a invaluable service to the market. We provide liquidity. If there was no retail spec, it would be no liquidity in these markets. And you need to know that. All right, so bullet point 1, you don't want them to say you can't take profit on the same day because that goes against the entire principle of the markets, period. Second of all, if they say, well, you got to now, instead of having 25,000 in your account at all times as a pattern day trader, we're just going to say you got to have 25,000 in your account, period, to do anything. Or they say you need 100,000 or $1 million. We don't want to see that either. We don't want any limit put on that because then that hurts the small guy. All right. Second thing, we also don't want it where they're pushing and forcing everyone to go into the futures markets. Now, I'm going to tell you why I say that. First of all, for those that know me, I primarily trade futures anyway. I love futures. I like the liquidity. I like that I can get in and out. There's no pattern day trading rule. If I want to get out and take profit, I can get out and take profit, and there's no one telling me that I can't do that. And I don't have to worry about, well, you got to wait for an uptick. The market didn't tick up. You got to wait for that little ticky-tack, that ticky-tacky. Bump that. I want to get out when I want to get out. And don't tell me I can't get out. See what I'm saying? So you don't want that. You don't want them telling you what you can and cannot do with your money. It's your money at risk in the market, not theirs. They do not have the right to tell you what to do in that regard. I am against that 100%. All right? The government should not be involved in treating adults like children, because that's really what it's boiling down to. They're trying to treat you like a child. All right, telling you what's good for you. Oh, we're doing this for, because we know best. This is best for you. That's not the job of the government. The government should not be in there manipulating and rigging the market. Let the free market be the free market. Let the market do what it do, dog. What's wrong with you? What's wrong with these people? Seriously. It's annoying that I even have to come out here and do a broadcast like this. I should not have to do a broadcast like this. Everybody should already know what time it is. And I don't want to see any of this change. Because in the futures, they already have the mechanisms to do what they do. They have what is called margins anyway. You got to have a margin to place a trade anyway. And when the markets get too hot or overheated or whatever, they raise those margins. Okay. And they can raise the margins in the big contracts and the E-mini contracts and the micro contracts. So they do that anyway. They already have that tool. But see, this is another issue that we have, ladies and gentlemen. Again, who's really at fault here? It's your government and it's Wall Street. Because see, back in the day, ladies and gentlemen, we had circuit breakers. They took those away. They turned those things off and threw them in the trash. We don't have circuit breakers anymore. We don't have curbs being thrown in anymore. Back in the day, if the Dow was getting a little too hot on the upside or the downside, they would just go ahead and put the curbs in, slow the market down a little bit, let people not get so excited. Let's calm down a little bit. The curbs would go in. And they had circuit breakers. Nope, the Dow is now moved 300 points, and we got to have a 5-minute timeout. That's what the market used to be like before they turned off the circuit breakers. Circuit breaker, oops, the S&P 500 has now moved 110 points. Therefore, the S&P futures is now closed for 5 minutes. Circuit breaker, sorry. 65 points, that's it, done. Yeah. Pre-9/11, the circuit breaker for the Dow futures was 300 points. The circuit breaker for the E-mini S&P 500 was about 65 points. I think it was 65 points. And the NASDAQ was the same as the Dow, 300 points. Up or down. Up or down. If it drops 300, circuit breaker, close the market, 5 minutes. No more trading, 5 minutes, timeout. Same thing with Wall Street. Up, the Dow is up 300 points. Circuit breaker. Sorry. Curbs are being put in. Curbs. Slow it down. Oh, no, the NASDAQ is now down 300 points. Close the market. Done. 5 minutes. Wait. And then the next one is 15 minutes. Yep. And, you know what else futures have that stocks don't have? They got lock limits. They have lock limits. Now all the futures have limits. Not all of them have limits. The bonds used to be 2 points. Then they took that away. Crude oil never had one. There's no limit. It can move whatever it moves. But everything else, limits. They got limits. Soybeans, corn, wheat, lock limit. Oh, and back in the day, pre-9/11, it was 30 cents. Or essentially 30 points. Soybeans is up 30. Up, market closed. No more longs. Sorry, no more long positions for the rest of the day. You're in a lock limit. Not until the market comes off lock. If it comes off lock, we can take more orders. But right now, nope. So if you got caught short in soybeans in a lock limit up move, you can't get out of the market. You cannot get out of the market. You are stuck until that market comes off limit. Then you can hurry up and sell out of it. I mean, buy out of it. But they have lock limits. All they have to do is put a lock limit move in equities. Do the same thing. But here's the danger with lock limits, though. If you use GameStop as our example, like we've been doing today, well, here is a scenario. GameStop. So GameStop has been gapping up like $200, $300, $400, $500 a day on the open, right? With a lock limit, what it does is it puts a limit on how much the market can move. So again, we'll use soybeans as the example. So back in the day, it was 30 cents. So if soybeans was trading at $4 today when the market closed, and then tomorrow the market, right before the open, you get your opening calls, right? Grain markets have opening calls on the floor. They say, okay, soybeans are looking to be opening up lock limit today. They're going to open up limit today. The grain report just came out, and there was a frost or something, or it was so hot yesterday, all the soybeans in the field caught fire. All right, so now lock limit, soybeans are called lock limit today. Market opens, I think if my memory serves me correctly, the pit used to open at 10:15 Eastern Standard Time. And market opens up lock limit. So now it closed yesterday at $4. It opened up today at $4.30. You shorted yesterday at $4. Today, the market opens at $4.30. You are hurting. You're down $1,500 per contract in soybeans because soybeans was $50 per point. You got hit for 30 points. You are now down $1,500 per contract. So if you was going Big Willie and you decide to short 10 contracts last night on the close, well, then you're down 15 grand. Now, tomorrow, let's say it stays lock limit all day. Market closes, never came off lock. Tomorrow, they say, okay, guys, all right, the market's about to open in a few minutes. The opening call this morning is for limit up. Limit up is no longer 30 cents because they had like this aggregated thing. So now it's like the new limit today is 45 cents. And they say, and guess what? The market's called 45 cents up on the open. And sure enough, market opens up. It is now moved an additional 45 cents. So now it's at $4.75. You are still short from $4. You are in trouble. You're vomiting, you're throwing up, and you're even contemplating leaping out of the window. You can't get out of the market because it's lock limit. Now, third day in a row, oh, the market is now being called limit up again. Now they extend the limit to 70 cents. Market opens up 70 more cents. You see where I'm going with this? Back in the day, I believe the last time it happened was in the early 1970s. But the lumber pit used to be brutal. Fist fights and stuff would break out, and they'd be brawling up in there. But it wasn't uncommon for lumber to go lock limit for an entire week. Can you imagine that? You're in a lock limit move for weeks on end. Well, that's what would happen to you. So limit moves can be a good thing, but if you're on the wrong side of it, it can be a rather nasty thing. Now, if you trade commodity futures long enough, at some point you'll get caught in a limit. It's going to happen. It's just the odds. Okay, I got caught in a lock limit before. Thank God it was only one day. It wasn't days on end or weeks. And it was soybeans. Soybeans. It punched me in the face once. It got me. I was short, and it opened up limit on me. It was hilarious. Everybody was laughing at me. I'll never forget it. And I had to call down to the trading floor and was like, yeah, go ahead and get me up out of this, please. There's a nah, all right. They said, nah, I can't do it now, but I'll let you know when we come off lock. And then when we came off lock, I went ahead and got the heck up out of there. Now, somebody say, well, why do you just, if it came off lock, maybe it'll come back down. No. You don't take risks like that when you're in a lock move because it lets you know typically if a market stays at lock or lock limit all day, chances are it's gonna continue to move higher. Even if it doesn't go lock the next day, it's gonna run for a little bit. Well, that's what we had with GameStop. So the first day GameStop exploded, everybody said, "Oh, we on the move." But then there were some skeptics who said, "Nah, it's just a fluke thing. It's just a parabolic move. It's gonna shake out by the end of the day." So I'm gonna go ahead and I'm gonna pile on. I'm gonna fade this, and then and they put on some more shorts. Then the next day it opened up like a gaps up $150, and they're like, "Oh my goodness!" They get margin calls, and because there's no lock limit move restriction, it's just allowed to go where it goes. Tomorrow, GameStop could open up at $2,000 a share. Then what? See what I'm saying? So, in some regards, lock limits could probably help a little, but then on another hand, it could also end up hurting. So it is what it is, man. It is what it is. There's risk in the markets. That's why we trade them. We trade the markets because you can literally make $1 million overnight, but you can also literally lose $1 million overnight. But that's why we play, because of the risk to reward. There's risk and reward. Those that generally take the most risk are the ones that reap the most reward. I mean, that's just a nature of law. It's a law, it's universal law. But you're not to be stupid. You don't assume too much risk. What I think is that they should put. I don't think the lock limit moves is the right way to go, but I think there should be a different aspect. And I'm using the futures as our guide because the futures markets, I think, are so efficient in this way. When you don't allow corruption to come in like they did with the crude oil a year ago. That was corruption, and no one went to prison. No one went to jail because it was the government behind it. And I went into a long diatribe on that one. I'm not going to hash that up again, but suffice to say, there's another dynamic that futures have that equities don't have that may be an answer here, and that would be position limits. See, futures contracts have position limits. Position limits were enacted after the Hunt brothers attempt to corner the silver market. After that, the CFTC came in. CFTC is the Commodity Futures Trading Commission. They came in and said, you know what? To prevent anyone from cornering the market again, we're going to put position limits on. Now, you may think, oh, man, that sucks, man. So you're trying to say I can't buy 2 E-mini S&P contracts? Oh, sure you can. The limits, though, are designed to keep people from cornering the market. Now, in a lot of these markets, the limits are ridiculous. The average retail person will not ever come anywhere near being able to do it. If my memory serves me correctly, I'm just going by memory, I think crude oil futures is 5,000 contracts. And I think the S&P, the E-mini S&P 500, I think is 500 contracts. It also may be 5,000, but I think it may be 500. So they have size limits. You can do the same thing with equities, You can say, okay, you can do GameStop. We're not going to intervene. We're going to let the market do the market. Do you? All right. They can say, you know what, GameStop, you can buy GameStop. You can do what you want to do. But remember, there's size limits. You can't buy more than what? 2,000 shares, 5,000 shares, whatever the number is. That's all you got to do. Just put limits on it. Okay. That's it. That's all you got to do. Just say, we got limits. You can't buy more than X amount of stock in a day or whatever. That's it. And don't make it too low. Make it, say 5,000. So you cannot buy more than 5,000 shares of stock of any one stock. Now, the reason why I chose 5,000 is because on the future side of things, 5,000 contracts is the equivalent of the $50 a point that the E-mini S&P historically traded at, $50 a point. So that's the equivalent of 5,000 shares of stock. So the futures were designed with that in mind. They already have the leverage built into them already. So like I said, you could do, with the Dow futures, it's one E-mini Dow, one mini Dow future is $5 a point, which is the equivalent of 500 shares of stock. The E-mini Nasdaq was $20 a point, which is equal to 2,000 shares of stock, and then the E-mini S&P 500 was $50 a point, which was equal to 5,000 shares of stock. So that's all you have to do is just say, okay, you cannot buy more than 5,000 shares of a stock. Position limit. Now, you could make this a daily position limit. It doesn't have to just be period, because you don't want to put a stranglehold on mutual funds, hedge funds, pension funds, whatever, because they have more money. So they should be able to buy more because they have more money and they're a fund. Funds, though, should be limited to position sizes too, though. And for them, it should be percentages. You can't have more than 5% of your portfolio in any particular stock. Now, I think mutual funds already run that way, where they can't have more than a certain percentage of a stock. Hedge funds, to my knowledge, don't have that limit, but perhaps they should. Perhaps you should use the mutual fund model for any fund. I don't care if it's a pension fund, private equity fund, whatever kind of fund. You cannot hold more than 5% of your portfolio, in one particular stock. You have to be forced to rebalance your portfolio. I think that would be a great way to do it. There was a platform back in the day called Marketocracy, where you could go on and you could have a mock portfolio and manage it and everything, but they made you use mutual fund rules, and that's where I'm getting this from. I'm going by memory. I think it was 5%. You couldn't have more than any one position 5%. It had to be 5% or less. It couldn't be more than 5%. So let's say I did. Let's say I was running a fund, and when GameStop was at $20, I went ahead and bought 5%. I invested 5% of my portfolio in GameStop, maxed it out 5%. Now that it's setting at $400 or $500 a share from $20 a share, by law, by rules, I would be forced to trim my holdings, because now it's exploded so much. It may now be like 90% of my portfolio. So by law, I would have to now go in and sell some shares to get it back down to that 5% if I wanted to maintain a core position there. So I think position limits is probably where we should go. I don't think lock limit moves are the right move for equities. I also think they should put back in the circuit breakers and the curbs, but that they also should add the position limits for funds. Position limits for funds. No more than 5% of your portfolio. So if it's a $100 billion hedge fund, so what? Can't have more than 5% of your fund in GameStop. Period. Just that's it. Plus, I don't see what the big deal is anyway, because what's been going on in GameStop is not affecting the overall market. It's just one stock. And I don't care if it was 20 stocks that this was happening to. That's still not even a blip or a drop in the bucket. In America, there are over 10,000 stocks. Worldwide, I think it's like, 2 million or something? 5 million? I know, somewhere ridiculous. We're talking hundreds of thousands. So because 20 stocks got raided, you're crying now? The raid game has been going on forever. Look at the movie The Big Short. I ain't see nobody crying over that. So why are you crying now? See what I'm saying? So I think we need to maintain an equal playing field. Big funds don't get a pass. Big Wall Street firms don't get a pass. If you're going to make these rules, they have to be for everyone. Congress does not get a pass either. Do away with the insider trading rule on Capitol Hill. Make it illegal for them to do any insider trading as well. As a matter of fact, you know what they really should do? Make it so that they can't trade at all while they're in office. You don't get to have your cake and eat it too. You want to be a senator? All right, congressperson or senator, then you can't operate in the market. You cannot operate in the market. Nope. And no insider trading for you. I think the rules should apply to everyone, not be arbitrary, where you get to enforce them whenever you feel like it to whomever you feel like it. Okay? It's whack. Just like pharmaceutical companies who are out here making the virus vaccine, they should not get a free pass of immunity either from prosecution. If they deliberately do something wrong and people get sick or die, they should be held accountable. You don't get a free pass. What are you talking? What are you crazy? It's crazy. Come on, really? Free pass? No, heck no. Heck no. If you're gonna make rules, they need to be for everyone. They need to be for everyone. Hormel and Kraft Foods and Nestle don't get immunity, free from prosecution if people get sick or die from their food. So why are you giving the big pharma the pass? Again, this is the corruption that I'm always talking about on this channel, ladies and gentlemen. It needs to stop. It really does. It needs to stop. Equal playing field, ladies and gentlemen, is what we need. All right? Everyone is under the law. No one is above the law. Not a president, not a senator, not a congressperson. No one. No member of the House, the Senate, the judiciary, nobody. Nobody gets a pass. The rules are for everyone. No one is above the law. Just saying. All right, I'm off that. I think I made my point loud and clear. I don't need to go any further. I think you get it by now. So where do we go here? Where do we go from here? This is hope and pray that they stop meddling and stop their interventionist attack on the markets. Let the markets be free. Let the markets do what they do. I think that's what we need. And everybody will be all right. And so that people don't get hurt, all they have to do is go to PulseWaveTrading.com, sign up for tomorrow's webinar, sign up for the PulseWave reports. That way you can learn some trading discipline, learn the rules of the game, learn how to get in and get out of the market and not get hurt. Learn how to trade, man, the right way. Seriously. Learn how to manage your open positions. Learn how not to over leverage yourself in the market. That's the only thing that's missing is discipline and education. And I think everybody be all right. But leave the markets alone and stop saying, oh, you can't trade GameStop. Who are you to tell someone they can't buy a stock? What kind of foolishness is this, ladies and gentlemen? We the people should not stand for it, ever. All right? So people need to vote. People need to vote with their feet. Okay? Now, I'm looking at it today. I don't know if this is a bad tick or what, but right now, today's volume in GameStop is 40,276,961 people. All right? Today's high in GameStop is $483. Today's low is $112.25. Current price $214. I'll make it $215.11. Do you see a problem here? I do. Leave the market alone. Let people do what they do, man. Cut it out. You know? I'm just saying. So hopefully the powers that be will listen. And by the way, according to what I'm looking at here, it looks like the run is over. I don't know if the Fed came in and did something, but from what I'm looking at right here, ladies and gentlemen, it looks like the run may be over in your GameStop. Sorry to have to inform you of that. But yeah, I thought I would just let y'all know. It's looking pretty bad. Looking real bad. So anybody who didn't get out is probably going to be getting hurt today. Because now the run seems to be over with. You know? All right, that's all I got, man. I don't have nothing else for y'all today. I just wanted to give you my little 2 cents. Tell you what I was seeing. Tell you what I thought. You know? I'm doing a little test while I'm talking to y'all. All right, I just did a little test to see if they would take my order and let me trade it. And yeah, I just put an order on for GameStop. So whatever restriction they had going, it must be done and over with now, because I just put a ticket on and it let me do it. It accepted it. So I guess you can trade GameStop again. But until the dust settles, I don't see why you would. Too much risk, too much uncertainty. I wouldn't do it. That's just me though. All right. So you know what it is. You know what's good. I said my piece. I'm done. I don't have nothing else to say. So go to PulseWave Trading and do what you got to do. Sign up, learn to break bread with us. All right. Come see how we do what we do, and make sure you take part in tomorrow's webinar, because trust me, you're not going to want to miss it. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Smash that like button. Peace.